shares or special funds such as Mansa X or Orc Fund or anything. People have been asking me, hey Joseph, tell us, between investing in shares or Mansa X or special funds, which one would you advise? Which one is actually the best to invest? Wow, that's a very mature, very genuine, and a very good question. And that is exactly I'm going to address on this particular video. For God's sake, it's less than 15 minutes video. Stay put. If you have something that is distracting you, switch it off and watch this. Now, if you're watching this for the first time, go ahead and hit that like button. Make sure that you subscribe and leave a comment on the comment section. If you're returning subscribers, always, thank you for your eyeballs. Now, here we are. We have the shares here and we have a special funds. Which one would you go for? First of all, you guys have told you everything about shares, so you already know what is a share. Let's define what are special funds. Special funds is this, by the way, is this special? Once you invest your money in a special fund, and I'm using what they describe it as a special fund, your money is being invested in a variety of areas. For example, they invest in over 2,000 areas. For example, commodities such as oil, wheat, whatever. They invest in metals such as gold. They invest in forex. They invest in very many things. Are we together? So that's why they are able to leverage on the returns. That's why they're able to give you quite over high returns. For example, special funds right now in Kenya, if you check on the Mansa X, is giving you around 20%. If you check on the Orc Fund, some are even giving you 45%. Can you imagine that? So people are getting into my DMs asking me, hey Joseph, hey, talk about this. Hey, this, we are getting a high good returns. Are we risking our cash? Should we put our money there? Listen, I'm not paying by anybody, so I'm going to tell you the truth. Whether it's a bad place, you avoid it, I'm going to tell you the thing. Now, the question is, we are comparing the shares and the Mansa X and the special funds. Where would you put your money? I would say this. These are two different investments. First of all, both of them are not low risk investments. So there is nowhere, both on shares and both on Mansa X or special funds, there is nowhere it's guaranteeing you what we call capital preservation. So there is nowhere you are capital preserving yourself here. So anything can happen. Are we together? So it's a moderate to high risk. But when it comes to Mansa X, or not really Mansa X per se, but special funds, I view them as a little bit of high risk investments. See, anything that comes with high returns comes with high risks. That is no brainer, isn't it? Now, when we talk about these investments, they are good. First of all, they are all regulated, they are all registered, they are all reliable. But which one should you pick? I would say if you are a beginner, if you're starting and you have to invest between the two, start with the shares or start with the stocks. Once you familiarize yourself with how the market behaves and investing and such, then you can go to the special funds. But I have to give you this big but. When you compare investing in stocks, they require a lot of work. You have to know which companies are you buying. You have to know where you are buying those companies. You have to know all those things. That is a thing that you have to understand. But when it comes to you investing in these special funds, they are just doing everything for you. Are we together? So if they are doing everything for you, it means that, by the way, some of the cash you even invested in the special funds, they invest it in the stock market. If you do not know how to analyze the market, they do that for you. They invest that for you. That's why they're able to leverage and all those things at the same time. Now, this is the point. Which one should you pick? If you are a beginner and you're starting, concentrate on the stocks. Invest on the stocks. Leverage on the stocks. Understand how the stocks works. Go ahead and do something about it. Then after that, you can think about getting into the special funds. Why? For me, if you ask me, based on me being in this industry of investing and such, I would definitely tell you that special funds are not really beginner investments. Why? First of all, they are not affordable. Why? The special funds, most of them, you need a minimum of at least 250,000 Kenyan shilling. That is an equivalent of $2,000-ish there. Some even require you having a minimum of like $500,000. So it is not really an entry-level investment. So if you're looking for an investment for an entry level, then stay away from the special funds. But then if you have good money and you actually have the financial muscles that allows you to qualify for that, then I would say, if I was you, again, I do not know your risk appetite, but if I was you, I would really, for now, the special funds is a new kid in town that is coming. We're still looking at their behaviors, how they are behaving, how they are doing the things. So I wouldn't really advocate you taking your dear money and putting all of it there. So you can actually have sort of a kind of balance. You can take like 40% on the special funds or 30, let's talk of about 30%, then 70% you can channel it towards, the stock market, especially the most reliable companies, the predictable companies and such kind kind of a thing, just because, you know, this is a new kid in town and something like that. So now the question should be, first of all, which one is the best? Okay, I know that may not be the best comparative, because this is not a three things we are comparing. So I should have said which one is better. It depends on where you are in the stage of life. If you already have a money market fund with you, if you already have some stocks with you, no, not really stock per se, if you have some treasury bills with you, you have some bonds, you have some fixed investment funds, you have some, say, real estate or rentals or something of that, you do not have any problem going to the special funds way. But I would advocate you going the special funds way, having laid down the protective layer, having invested first on the most reliable areas whereby your money is not at risk, whereby your money, you know, hey, you know what, sure, I'm putting this money there with the full know-how and the knowledge that this is a high yield investment which is giving me this crazy returns. Because honestly, in a market where we are getting say 14%, in a market where we are getting 13% and we are celebrating it, and someone is giving us 20, 25, 30, 40% or even more than that, then of course it means that it's coming with its fair share of risks. So what I would advocate you to do is to make sure that at least you plan yourself in a very diligent way. Make sure that you don't put all your cash under the risk. Now, the thing is this: when you compare these two investments, shares has been with us for very many years. Of course, it has been there during our great-grandfathers, our grandmothers and fathers and our parents, and still there. So it's a thing that has been tested by time. It's a thing that, hey, you know what? We all know if a company goes into the down drain, say you buy shares of particular, say a company A, and the company A goes into the down drain, and then it means your money is... But then, we all know, I mean, you can tell if a company is going down, so you can be able to sell your shares, you can withdraw as fast as you can or something like that. But then when it comes to the special funds, I think the oldest special fund we have as of now, it is around, again, I stand corrected, I think it's the oldest one is around 10 years, if I'm not wrong. Again, always verify whatever I'm talking about, okay? Because I'm not perfect. No one is perfect, actually. So if you have an investment that is only 10 years old, it is good to make sure we don't avoid it. First of all, you don't avoid it. You remember some people are saying, hey, we regret that we never bought the Bitcoin when they were, you know, when they were affordable, like $100. Right now, they are over 120,000 or close to 120,000 USD. So the thing is this: we shouldn't avoid the new kid in town. Don't avoid it, but get into it with a very, very cautious step. Almost, should I say, it's like walking on the eggshells, making sure that, yeah, I'm getting into this investment, but I'm not really that sure. So I ain't gonna risk all my money. I'm gonna put a fraction of it. For example, I do invest in crypto business or in cryptocurrency, but I cannot exceed 5% of my portfolio. Why? I'm not saying that crypto is bad to invest. No, it is good, it is great. But again, it's sort of a new kid in town. It's still an invest. By the way, nowadays, if you pull an average person on the street and you ask them, hey, what is a Bitcoin? Most of them, they won't tell you what actually Bitcoin is. Actually, it took me a lot of time to understand what are Bitcoins or what are cryptocurrency. But then, therefore, it means whenever you don't understand something fully, it is not good to just go there blindly and relying on what you're being promised. It is good to get there. But this is what we say. This is an African proverb that says, don't test the depth of the river with both feet. Otherwise, if you realize that the river is quite deep, then how will you get out, you know? So it is good to test the depth of the river with at least 1 foot. If you realize it's too steep for you to cross, then of course you can retract and figure out on how you can cross the river. So basically, this is what happens when we have new kids in terms of the investments in town. Pick that investment that you know it is a bit reliable, it has been tested by time, and put your dear money there. This is how we do it. And by the way, this is the formula that you should always use when you're investing. First, start with the emergency fund, okay? Start with the money for the purpose, just in case something happens. We say just in case a BS happened, you are able to know, hey, you know what? I have a soft landing. So start with an emergency fund. Number two, start with the investment that are predictable, reliable, and their patterns are quite readable. You get what I'm saying? When the moment you have an investment that is coming from 20 to 10 to 15 to that, that is too fluctuating. But when you start with an investment such as bills, bonds, this conservative way of investing, you know, the cash or cash equivalents, when you start there, now you can now take that big, you know, big leap of investing in other riskier areas. So what is the answer to the question between money market, or rather between stocks and special funds? I would say both of them are good, but the question should be, how can I get both of them at the same time? But the fraction of the cash that you invest should differ. Give a major, what do you call it? A major attention to the ones that at least has a little bit of predictability, has been tested by time. Then the other fraction, you can have it in the special funds. So when you have that healthy combination, that healthy look, then that way I can tell you for sure you're gonna have yourself a very decent, predictable investment. And by the way, in case you would like us to have in Swahili we say nyuma ya tent, at the back of the tent conversation, my number is always on the description of this video. You can pick it up there. Let us have a very private conversation. Why I always insist that it is good to make sure that you consult first. You know, consult your financial advisors, whoever they are. Just give them a call, go have a sitting, ask them some questions, so that at least they can understand where are you financially, you know, in terms of liquidity, where are you in terms of liquidity, what can you be able to invest, so that at least by the time we are telling you, hey, invest on this, they have actually checked all the parameters and say, hey, there's someone who can approach me and tell me, hey, Joseph, you know, I only have, say, 200,000. That is the only money I have, or 250,000, and I want to get into these special funds. I may not find that being a very appropriate way to go, because you ask them, hey, do you have some emergency fund? No. Okay. Do you have some other cash settler? No. Do you have other existing investment that are a bit conserved? No. But in that regard, it may be a little bit riskier to get into that. But are they bad? No, they are not bad. First of all the special funds in Kenya, most of them, and I stand corrected, they are regulated by the relevant body, which is the Capital Market Authority of Kenya, and they are reliable, so they are known products. They are known, those fund managers are registered. But am I just rubber stabbing them and telling you guys flock there and invest? No. Sit down, do your own research, decide which one you want, and in that regard, then you can be able to pick the one that you can go with. This is Good Joseph. Don't forget to hit that like button, make sure that you subscribe, and see you in the next one. Bye-bye.